Hello friends, chapter 3 of economics survey is extremely important, that is monetary management and financial intermediation, refining the regulatory touch. Before this chapter 3 we had already discussed chapter number 1 and chapter number 2. In case you hadn't watched that, do watch that videos as well. So if we talk about the chapter number 3, that is regarding to monetary management and financial intermediation, why this chapter is extremely important? The reason is, whenever the UPSC ask question from economy section in prelims as well as in mains, they focus a lot on monetary policy, because it is the monetary policy only whose decisions or whose basically policy changes will impact the consumer base a lot, whether it is controlling the inflation, whether it is enhancing the business expansion loans. All these things are done through this monetary management. And this monetary management is not only restricted to the repo rate or to CRR SLR, also towards the recent digital public infrastructure as well. So this chapter is extremely important, or if I can say, from whole 16 chapter of economic survey, this is the most important chapter. So guys, don't skip this chapter. In short, read it comprehensively. I'll also explain this through questions, and I'll explain the whole chapter in detail. So let's move. First of all, what is the meaning of monetary management? If someone asks you a very simple question, explain what is the meaning of monetary management. The simple meaning of monetary management is that how the central bank, that is Reserve Bank of India, actually control money supply, interest rate and liquidity in the banking system. These three components, whether it is money supply, interest rate or liquidity in the banking system, is quite essential for the overall economic development. How the money supply can be impacted? Suppose if there is huge inflation going on, or if there is, let's say, galloping inflation is going on. In that case, if RBI feels or the monetary policy committee feels that the inflation is actually breaching the target, inflation targeting is 4% plus minus 2%, revised after every 5 years, done by the central government on the recommendation of RBI. So if the inflation is going beyond 6% rate, that is 7% or 8%, in that case the money supply need to be restricted. And how this money supply can be restricted? By increasing the repo rate, by increasing the CRR. Then interest rates, as we all know that the inflation is going on a higher side, it might be because of demand pull or cost push, and whatever is the scenario, in that case also the interest rates matter a lot. Suppose there is a huge demand pull in demand pull, inflation is increasing, that means people have more money and they are penting up the demand, they are investing more of money. In that case also the interest rates will be hiked, so that the borrowing limit will get reduced because of excessive inflation. Then the liquidity in the banking system, this is again extremely important. If suppose there is a recessionary trend going on in the system or slowdown going in the system, and in that case we need to revive that demand, or we need that the loan of the banks need to enhance. In that case also there is proper liquidity need to be kept with the commercial banks. So these all things are very important for the overall monetary management. And the overall core objective of this monetary management is to maintain the price stability by controlling the inflation, that is 4% plus minus 2%. This is the inflation targeting. So if the inflation goes on, keep on increasing, in that case the essential commodities also their prices increases. So the objective is to maintain the price stability. Then the supporting economic growth through virtuous cycle. Suppose if the demand is more, and in that case the production need to be enhanced. How this production can be enhanced? प्रोडक्शन को कैसे बढ़ाएंगे? How this business expansion can be done? This business expansion can be done when the investments can be increased. And investment simply can be increased only when the money supply should be proper. That means if money supply will be more, if money supply is more, the investment will increase in future. So to ensure the financial stability, then financial stability, why it matter? Because whatever the decision we are taking on, whatever the economic growth projections we are talking about, it all depends on financial stability. Uncertain financials, what we can say, when our economy is facing financial uncertainty or financial less stability, then in that case FDI also fall. In that case FPI withdraw their money. Even the investments, domestic investment also dampen. So that's why this financial stability is very much as necessary. And lastly, promote financial inclusion, because the more the financial inclusion is, the more the people associate themselves with the formal banking system. It will enhance the overall money multiplier, and if the money multiplier enhances, banks will have more money with themselves, which will lead to more lending, and the whole cycle of the economy through monetary management revives. So this is very important. This is the core of monetary management. Moving ahead, global financial market. Let's talk about what is going on in the recent times. If we talk about right from 2025, the US tariff announcement raised the uncertainty. Now, because of extreme US tariff on the imports that is done by the US by the US government, as a result of that, when the imports keep on increasing, then in that case the US companies or the US domestic companies feel that pressure. So to reduce that pressure on their domestic companies, Trump actually enhances the tariffs. Now if the tariffs enhances, the export from the all over the world, their price increase. As a result of that, the prices of the exported products enhances, which will give a leverage to their domestic companies. Now as US tariff announcement raised the uncertainty, investors shift from US dollar to gold. Usually whenever there is an uncertain system is going on in the whole economic system, all the big investors prefer to invest in those assets which will give them a certain returns, or which will give them a stability. So the more, even not only the investors, the big countries also trying to invest more in gold, because they feel that the gold is a safe asset, even though it is actually giving not that much return in comparison to stocks or in comparison to bonds, but still they want that a certainty should be there. Apart from that, equity market fell temporary. This is the biggest setback. Equity market fell temporary because they feel that the market may crash anytime, and in that case whatever the money they put in the market, the value or the return may fall. So they wipe out their money, especially from the developing economies, and that too from India also. So they'll withdraw that money, invest that either in US treasury, US gold, US bonds, or in gold. US bonds, the reason is they are offering a good return, but they are stable as well. So that's the reason equity market fell temporary. Credit spread widened. Credit spreads widened. Now, how uncertainty hurt the economy? Uncertainty, whether in the personal lives or in the economics life, both hurt a lot. So most of the people, most of the firms, most of the businesses, they all are right now follow this path, wait and watch channel. And this is not only restricted to 2025. Even right now we are standing at April 2026. This wait and watch channel keep on increasing, just because of right now Iran Israel US war, and because of all the uncertain environment that is going on in the system. Firms delay the investment because returns are unclear. They don't know how much how much the returns they can expect. That's why they're investing in gold, or that's why they are investing more in US safe bonds, even though returns are less, but they want the certainty. Then waiting has an option value. Rather than investing or pump your money into some asset, and in return if you're not getting that much of return, then in that case you may lose that money. So people are focusing on this, and big investors and businesses are investing this thing, that rather than putting our money into an asset, we should wait. After 6 months or 10 months or 7 months, might be the market will again improve, and then in that case the option value have more returns. Option value here means that not that call put option. Option value means when we are waiting, we will get the more return, because the clarity is more in front of us. Then capital formation slow. When the investments actually falls, as a result of that, the banks will not people are not taking the loan from the bank, even they are not investing that much of money. So the overall capital formation falls, and that led to more of vicious cycle in the economy as well. Then cost of financial channel. Uncertainty led to higher risk premium. Obviously when there is more uncertain environment, premium cost is high, borrowing cost is high, credit become expensive. That means loan become expensive, because everyone want that they should get the fair return out of the things. So if this uncertainty keep on increasing, it led to higher risk premium, high borrowing cost, and obviously the credit become expensive. Now, let's talk about the banking sector health. This is the what we had discussed till now. It is just the overview of what is going on in the monetary policy system. Now, let's take the sector-wise things. First of all, banking sector health. Gross NPA fell to 2.2%. That's a good news. It's a multi-decade low gross NPA. That simply means, first of all, we should classify what is the standard asset means. Standard asset means that form of asset where the banks are receiving the money in interest installment on a timely basis. Then substandard asset, that means they are not over the 90 days period has been gone, but they are not received the money on time, and especially it's now near to the year. Then doubtful asset, that is more than 1 year they are not receiving any kind of amount, and in that like interest, principal, installment, whatever. And the loss asset means now there is limited or very less hope to recover the money. Now the gross NPA fell to 2.2%. There is one more thing that you should know. What is the difference between gross NPA and net NPA? When the banks do the provisioning part, let's say a bank knew that we had given a loan of 100 cr and might be 10 to 15 cr maybe become NPA, then they will make a provision like this particular provision that all okay, we'll make a 8 crore loan or 10 crore amount separate that should be for NPAs. That is the meaning of provisioning. So the more the provisioning is, the bank will give less money on lending basis. So when we subtract gross NPA minus provisioning, it led to net NPA. So indicate balance sheet repair complete. Apart from that, the most important thing is IBC versus SARFAESI. This says what is IBC versus SARFAESI simply means that particularly because of this banking sector health reforms, after the what we can say keep on mounting NPAs, जब से ये NPAs बढ़ रहे हैं, insolvency, bankruptcy and SARFAESI helps a lot. Insolvency bankruptcy code enacted in 2016. We have adjudicators, we have regulators. In that case, it's very essential that the bank's overall losses will get reduced. So we have the adjudicators in form of NCLT and DRT. Company matters goes to NCLT, and other matter, partnership firm, individuals, all matter will go to DRT. Then we have on another side, we have the regulators. Insolvency professional insolvency resolution agency or professional agency, information utilities. All this process need to be completed within 330 days. Now, the whatever the committee of creditors decide by 66%, they will approve that debt recast plan. All these things will enhances the option of right to exit as well. Then the SARFAESI is an old act where the asset management companies or ARCs help the recovery of amount. Then, so insolvency bankruptcy code is time bound, as I mentioned. It is 330 days we need to complete the process. High recovery 40 to 45%, discipline through threat of loss of control. So there is basically a discipline more in IBC, and after that, not only IBC and SARFAESI, after the creation of bad bank as well, because of NARCL or IDRCL, things become more smoothened. Then SARFAESI Act faster, lower recovery, although the recovery is lower, and work better for retails and MSMEs. Now, if we talk about RBI's monetary action, repo rate. What is the meaning of repo rate? The rate at which RBI provide short-term loans or loans to commercial bank, rate at which bank borrow from short-term from RBI. There is a cumulative, if we talk about the cumulative cut, it is around 125 BPS. Now friends, 125 BPS cut means that simply means Monetary Policy Committee find that we have ample of scope for rate cut, and they also want to expand the spending capacity of the people by providing them money. So money supply is increasing because of this particular rate cut. Then objective stimulate credit, reduce the borrowing cost. CRR, every commercial bank, every scheduled commercial bank, not commercial bank only, every scheduled commercial bank is required to keep some reserve out of its net demand and time liability in cash form with RBI. So portion of deposit bank must park with RBI. If CRR is if cut, that means less amount need to be deposited with RBI, and in that case more amount will be given for lending. Then liquidity injection is around 2.5 lakh crore. This shows that monetary policy and the bank RBI also want that the overall capacity of the people to take the loan and to do further expenditure, because it will have a multiplier effect. Not only it will increase the money flow in the system, it also led to more taxation generation, because if you are keep on take loan, purchase anything, you pay the GST also on it. So, and it will provide the employment as well. This is all led to virtuous cycle. Then liquidity operations, OMO purchases. What is the meaning of OMO purchases? Whatever the government has given, OMO means open market operation. So when the government government is actually buying the securities from the commercial banks or from the people, that means they're giving money back to them. This is again very important tool. If there is high inflation in the system, RBI usually sell these OMO so that people should buy them, and this is the very important tool in inflation management. So that means if they are buying it, they give the money to the people so that they want that spending should enhanced. Forex swap is doing on, if suppose dollar keep on mounting, keep on increasing, then RBI with commercial banks do the swap transaction, give them dollar, buy the rupee, in condition that they will exchange it again. Then durable liquidity ensure transmission. So monetary stance is basically shifted to neutral and accommodative. I'll explain that stances also. There are three type of stances. Generally three type of stances. First is accommodative stance. When there is what I can say, when there is a slowdown or recession is going on, usually RBI follow the accommodative stance. That means they need to enhance the money supply in the economy, and with this accommodative stance they reduces the repo rate. Under the hawkish stance, if the inflation is keep on increasing, they follow this hawkish stance to increase the repo rate and to reduce the money supply in the system. And third one is neutral stance, that to keep the policy repo rate unchanged. So this is the monetary stance they are focusing on. Talking about the next part, that is credit growth and MSMEs. We all knew this fact that MSMEs are the engines of economic growth, and MSMEs keep need that money because they need their money for the working capital requirement as well as for the fixed capital requirement as well. Now, under the PM Mudra loan, Shishu Kishore Tarun Plus, they'll get a loan up to 20 lakh rupees. So MSME grow faster than large industry. Now this can be a prelims line. This can be a simple prelims line. MSME's growth is faster than large industry. The reason is pent-up demand. What is the meaning of pent-up demand? Pent-up demand means when the people are not doing spending because of COVID or because of any circumstance, and as a result of that, once that event get over, they increase their spending limit immediate basis. दिस इज द मीनिंग ऑफ पेंट अप डिमांड. कोविड के टाइम पे लोग इतना खर्चा नहीं कर रहे थे क्योंकि अनसर्टनिटी बहुत थी, ट्रैवल कर नहीं सकते थे, इतना ज़्यादा प्रिकॉशंस रखने पड़ रहे थे. जैसे थर्ड वेव ओवर हुई, लोगों ने डिमांड करना स्टार्ट करा, लोगों ने उन चीज़ों में अपने पैसे को खर्च किया जहां वो पहले नहीं कर पा रहे थे. दैट इज द मीनिंग ऑफ पेंट अप डिमांड. विद डिजिटलाइजेशन, it enhances the transparency, it also promote accountability, it also lead to clear picture what is going on in the system. Then formalization, from informal to formal, that means regulation is proper. In that case, accountability is also there, so that also led to increase the overall growth. And policy targeting, this is very important component. Usually policy targeting help us to know where we are actually spending our money, where our expenditures are heading towards. So policy targeting is also important. Then under the credit guarantee schemes mean through bad bank also, the they'll get a amount, fixed amount, that if suppose they are not able to sell off their asset, or they are not able to generate that much of amount by selling off the asset, they'll use this credit guarantee. So this credit guarantee scheme also reduces the bank risk. Now because they have this thing in their mind that you need not to stress about your NPAs, you should focus on your core banking activities. We will try to figure it out how to reduce this NPA problem and how to clean your balance sheet. Then encourage lending to first time borrowers and also catalyze inclusion. Inclusion means sum total. That means we need to include all the segments of the population, all the small industries as well. Now, shift from bank to market. This is again a very important line that may be asked in prelims exam. Large firms now borrow less from bank. Guys, remember this thing. There might be a simple statement in the prelims that the large firms are borrowing more from banks. No, they are borrowing less from the banks. As a result of that, banks have more money accumulated with them, and as a result, they can lend it more to small MSMEs or to the retail individuals as well. Now, if big companies are borrowing less from the bank, that simply means cheaper bond market, because they are releasing more of commercial paper, and commercial paper will give them more money, 7 days to 365 days, having good net worth, having good credit rating, and apart from that, it should be in multiples of 5 lakh. Endorsement is also possible. So faster fundraising, then longer maturity, and less regulatory friction. Money market components are regulated by RBI, but they are less stringent in comparison to this. This reflects financial deepening, not weakness. This is again very important slide in context of prelims exam. Moving ahead, FPIs, foreign portfolio investment. That means the investment less than 10%, usually in stocks, usually in form of passive investment. So equity investment is still very volatile because they feel that we don't know about the uncertainty, like how much return we will get, how much the risk is there. So whenever they are talking about the equity, the volatility is more and it is more sentiment driven. वी ऑल न्यू दिस थिंग. अभी हमने रिसेंट में देखा ईरान इराक ये ईरान और जो ये वाला इसराइल वाला जो इशू था, इसमें क्या हुआ? देयर इज सो मच ऑफ अनसर्टेनिटी गोइंग ऑन, मार्केट लगातार नीचे डिप कर रहा है. सो इक्विटी वॉलेटाइल एंड सेंटिमेंट ड्रिवन, वेयर इज डेट इज मोर यील्ड ड्रिवन एंड स्टेबिलिटी ओरिएंटेड. That's why I'm talking about this thing. FPIs are withdrawing their money from Indian market, especially equity market, and investing in US bonds because they are more stable and they are more yield driven. Similarly, even the debt instruments of the government, the government bonds, they are more stable and giving, although they are giving less return in comparison to equity, but right now people are preferring stability more. So FPI exit equity but buy debt as AI boom everywhere. Elsewhere, Indian bond offers stable returns, currency risk management, and bond yield spread is logical. Lower India US spread, lower risk premium signifies fiscal credibility. Then domestic institutional investment. I hope guys you know what is the meaning of spread. Spread means lending plus minus depositing costs. For example, a bank lend the loan at 6% and on deposit they are giving 4% interest rate. So 2% is their profit. That is the meaning of spread. So domestic institutional investors, why domestic institutional investors overtook FIs? First is SIP inflows. SIP inflows keep on increasing. People still trust a lot on SIPs because in long run they will give the better returns and they have a multiplier effect as well. बिकॉज इट्स नॉट अबाउट द सिंपल प्रिंसिपल दैट द मार्केट अभी नीचे है तो SIPs रोक देता है. नहीं, SIPs में इनफ्लोज अभी भी है. रीजन बीइंग पीपल फील दैट थिंग दैट SIP विल इन लॉन्ग रन विल गिव देम गुड रिटर्न्स इफ वी आर इन्वेस्टिंग इन म्यूचुअल फंड्स. पेंशन रिफॉर्म्स एंड इंश्योरेंस एक्सपेंशन. इंश्योरेंस एक्सपेंशन इज अगेन very important. We had a target that by 2047 insurance for all in different segments. For that we have the Bima Trinity as well. Bima Vistar, Bima Vahak, Bima Sugam. Bima Sugam means to make the process easy. Bima Vistar means to expand the insurance facility for marine, life or fire insurance. And Bima Vahak, that is through women's. We need to expand this Bima coverage. Then mutual fund plus SIP revolution, regular household saving are put into that. Counter cyclical support to market, because if the market is falling, you will buy more units of mutual funds. This is the plus point in that. Reduce volatility. So saving enhances the capital market, promote the investment and led to long-term growth as well. Now, talking about the microfinancial part. What is the microfinancial part? They are again very important because they are not only provide the money but also enhances the financial stabilities in the system. So regulatory action stabilization. Early the micro financial institution sector faced stress due to over borrowing. Now they are themselves regulators and self-regulatory organizations stepped in. This is again a current affair point that the micro financial institution now have self-regulatory organization which will oversee their functioning. That means ये ध्यान रखिएगा, ये बहुत इंपॉर्टेंट है. माइक्रो फाइनेंशियल इंस्टीट्यूशंस को ओवरसी करने के लिए दे हैव सेल्फ रेगुलेटरी ऑर्गेनाइजेशंस. सो ऑपरेशनल इंप्रूवमेंट. माइक्रो फाइनेंशियल इंस्टीट्यूशंस बेटर परफॉर्म्ड इन फाइनेंशियल ईयर 2026 एज इट लेड टू लोन डिसबर्समेंट इंक्रीज. लोन डिसबर्समेंट इंप्रूव हुआ है. सॉल्वेंसी रेशियो इंप्रूव्ड. That means the risk or what we can NPA get improved. Then apart from that they are become financial healthier and more stable. And this is the biggest revolution. Digital public infrastructure. Right now agri stack or what we can say energy stack. DPI actually changes the whole monetary system and give big credit to the current government because they had worked a lot on this digital public infrastructure, especially UPI. Then with DPI and digital payment, cash flows can be tracked better. We have better transparency, accountability. Credit assessment also improved. Even in the credit growth enhances in the rural areas to small and marginal farmers, e-rupee. Then rural households and that voucher wala system जिसमें वो particular voucher, you don't need to have a bank account, you don't need to have a smartphone, you will get a voucher, you can scan that voucher and that can be used only for that purpose for which the voucher is given and for to that person only. So small marginal farmers, rural households, all these will get the benefit out of it. Then financial inclusion. I mentioned many times that financial inclusion is the necessity. It's not an option, it is a necessity right now. So the survey treat financial inclusion as an economic growth tool, risk reduction mechanism, and a productivity enabler. So DPI, identify, account, payment, data trail. So ladder look like this. First of all, we have the bank account under Jandhan, then digital payment through UPI, transaction history, credit access through Swanidhi, then insurance plus pension, all led to economic security. This is very important that you can use in mains as well. या आप mains में भी use कर सकते हो flow diagram को. Then step 1, universal bank access through Pradhan Mantri Jan Dhan Yojana. What Jan Dhan actually achieved? Near universal bank accounts, zero balance account, direct government interface with citizens. Step 2, from account to credit through Pradhan Mantri Mudra Yojana till 20 lakh rupees loans, Shishu, Kishore, Tarun plus. A small loan, that is what I have talked about. First time borrowers include, even women and micro entrepreneurs get the priority under it. Then step 3, targeting to informal urban poor through PM Swanidhi. Street vendors, ये इनके लिए बहुत बड़ी स्कीम थी. स्ट्रीट वेंडर्स को डेली कैश नीड्स चाहिए, कोई फॉर्मल एड्रेस नहीं है, कोलैटरल भी नहीं होता, तो यहां पर मनी लेंडर्स के ऊपर बहुत डिपेंडेंट होते थे ये. विद पीएम स्वानिधि इनोवेशन, स्मॉल वर्किंग कैपिटल लोन्स दिल गेट, सो दैट देयर ऑपरेशन शुड नॉट गेट रिड्यूस्ड और operation should not get stopped. So they will get small working capital loan, digital repayment incentives as well, and their credit score is also created so that the bank should also identify that to whom we are giving the loan, that must be a person who will repay it on timely basis, and we should also try to reduce our NPS as much as possible. Now, financial inclusion, the game changer, digital payment, UPI. UPI is not just a payment app. It is everything that led to seamless and easy movement. And now the UPI is being used in 8 countries as well. 8 countries में UPI इस्तेमाल भी हो रहा है, Qatar being the latest one. So payment data is also financial visibility. When someone uses UPI, transaction get recorded, cash flow become visible, and risk assessment become possible. But the key problem in context of India is we have many dormant accounts, credit risk, and over indebtedness. This is the major issues that you can write in the mains exam, that the dormant account, credit risk, and over indebtedness risk is still persist. Then again, this is a kind of a topic which is very important in this specific chapter. As I told you that this chapter is very important. Now in this chapter, which is the most important component? This part. AI in finance and RBI's free AI framework. So why AI in finance matter? Finance is now driven by algorithms, big data, and real-time digital footprint. AI is already being used in credit scoring. Credit score में use होता है, fraud detection में use होता है, customer onboarding, risk management, trading, and portfolio allocation. AI, you cannot deny this fact that now life is impossible without AI. And even in the big institutions, big firms, big government setup, they all are using AI. So RBI also says that we should also use AI, but in a systematic manner. That is for credit scoring, fraud detection, consumer onboarding, customer onboarding, risk management, trading, and portfolio allocation. And that's why they had given the 7 sutras for AI. Mains question as well as a kind of prelims question may be asked. First is free AI, that is 7 sutras for AI. Fairness, that is avoid discrimination, avoid all the discrimination that is regarding to AI. I'll show you the 7 sutras of responsible AI that we will discuss, but first discuss what is the meaning of free AI. Free AI का क्या मतलब है? Fairness, that is avoid discrimination. Whenever you are using the AI, it should not discriminate between the people. Then robustness, perform well even during shock, not collapse during market stress, liquidity crunch, and economic slowdown. Then explainability, bank must be able to explain AI decisions to customer, regulator, and court. देखिए, what RBI is saying? RBI is saying that we can't deny this fact that AI shouldn't be used. AI should be used, but should be used in a systematic manner. That's why RBI said this free AI. Fairness, that means there should not be any kind of discrimination. Robustness, robustness means even when the system is collapsing, or even when the economy is facing the problem, it shouldn't get collapsed. Liquidity crunch, economic slowdown, it should stand like a mountain. Then explainability, bank must be able to explain AI to customer, regulator, and courts. The reason is still it's a new kind of a thing for many people. For 145 crore Indians, we have only very few people who understand this concept. Still, the majority of the population doesn't understand how to use it, what are the changes it led to. So we explain this to customers, to regulator, and to court as well. Ethics: AI should respect privacy, avoid surveillance misuse, and protect the dignity of consumer as well. Accountability: that means there should be proper accountability, because the final responsibility must lie with bank management and NBFC leadership. And last, AI should use to expand credit access, reduce cost of finance, and bring informal actor into the system, so that the things should be you go in a proper, systematic, and transparent way. Now, what are the 7 sutras of responsible AI? First, human in the loop. ये बहुत ध्यान रखना है. AI should not replace human. AI should assist human. This is the first thing. Human in the loop means AI should assist, human should decide. बिकॉज ह्यूमन के पास जो विजडम है वो एआई के पास नहीं है. एआई आपको असिस्ट करने के लिए, रिप्लेस करने के लिए नहीं है. सेकंड, एक्सप्लेन बिफोर यू डिप्लॉय. नो डिप्लॉयमेंट ऑफ एआई मॉडल दैट कैन नॉट बी एक्सप्लेन. Use that AI models only that will explain the things, that is easy to use and that can be easily understandable to the others as well. Then proportional use. High risk decision, those decisions which are very risky, there must be a stronger oversight over them, because it will affect a lot of people. Then fourth, data minimization. Used only relevant data, that is very relevant. ऐसा नहीं कि एक किसी भी पर्पस के लिए यूज किए जा रहे हैं. It should be used only for the relevant data. Sutra 5, bias testing. Regular audit to check discrimination, especially for MSME, women, and rural borrowers, that there should not be any kind of discrimination. Biasness should be tested. It should be like biasness should be tested. Stress testing AI model, just like bank stress balance sheet, AI model should be tested for crisis scenario. Suppose if there any kind of crisis happen, how it should help, how should it react, that should also be tested. Then Sutra 7, gradual scaling, pilot, test, and scale. Hence, we conclude that in India, AI in India is tightly linked with Jandhan, UPI, GST, and account aggregator, which will help the people to connect to the service provider and service users. Okay. Then, if we talk about the insurance sector, as I mentioned, insurance for all by 2047, Bima Trinity is a component. So it should be a vision with universal risk protection, that is Bima Vistar, financial resilience. Then penetration versus density paradox. देयर मस्ट बी नो लो पेनिट्रेशन नहीं होना चाहिए. पेनिट्रेशन और डेंसिटी दोनों एक साथ यहां पर एनहांस होना चाहिए. मींस रिचर शुड अभी क्या प्रॉब्लम हो रहा है, इंश्योरेंस डेंसिटी तो एनहांस हो रहा है लेकिन पेनिट्रेशन लो है. इससे ये समझ में आ रहा है कि जो रिच पर्सन है वो तो प्रॉपर्ली इंश्योर्ड है लेकिन पुअर अभी भी एक्सक्लूडेड है. लेकिन यहां पर जो बीमा विस्तार, बीमा वाहक और बीमा सुगम जो है, ये तीनों इस बात पे बात करते हैं कि इंश्योरेंस फॉर ऑल बाय 2047. दिस इज द की. Pension portability and actuarial strength. NPS portability should be there. It's already there now. Long-term sustainability towards the pension. Defined contribution safety. There must be a contribution safety as well. Saving should match to age, risk, and retirement needs. This is just a basic regarding to pension. Now, guys, pause the video and solve these questions. Question number 1. Consider the following statement regarding monetary transmission. Reduction in policy rates by central bank does not always lead to immediate proportional decline in borrowing cost. True. Might be the bank cost is more. In that case, even the repo is reduced by the central bank. If the bank's cost is more, then in that case, they will not reflect immediately to the consumer, to the clients. RBI ने अगर रेपो रेट कट किया है तो इसका मतलब ये नहीं होता कि बैंक्स भी इमीडिएटली कर देंगे. उनकी कॉस्ट ज्यादा हो सकती है, कोई और रिस्क एनपीए उनके ज्यादा हो सकते हैं. सो डिपेंड्स ऑन द बैंक एज वेल. लिक्विडिटी कंडीशन इन बैंकिंग सिस्टम हेल्थ इन्फ्लुएंस द इफेक्टिवनेस. ट्रू. लिक्विडिटी कंडीशन ऑफ बैंकिंग सिस्टम बहुत मैटर करती है. दैट्स करेक्ट. हायर एनपीए इन बैंक कैन वीकन द ट्रांसमिशन ऑफ मॉनेटरी पॉलिसी. दिस इज ऑल्सो ट्रू. द मोर द बैंक्स एनपीए, द वीकर द ट्रांसमिशन पॉलिसी. So 2 and 3 both explain one actually. Yes, A is the right answer. Question number 2. Consider the following statement regarding AI in finance. The use of AI in finance can improve credit access for underserved segment. True. Digital data trail from payment system enhance credit assessment. True. AI system can eliminate all form of biasness in financial decision making. That is correct, but ये practically अभी possible नहीं है. AI system कैन एलिमिनेट, ये करना तो है बट ये प्रैक्टिकली अभी पॉसिबल नहीं है। इसमें एक लाइन लिख लीजिएगा यहाँ पे, ऑल एआई सिस्टम will eliminate all form of biasness, not that much possible। biasness तो तभी भी होगी, बाकी ठीक है कि हमारा ऑब्जेक्टिव है कि AI सिस्टम कैन एलिमिनेट, लेकिन क्या सारे कर पाएंगे ये अभी भी चैलेंज है। तो थर्ड स्टेटमेंट इज एक्चुअली रॉन्ग हेयर, जस्ट yeah, so the correct answer is only one of the statement 2 and 3 is correct, and that explains statement 1. So C is the right answer here. Now this is conceptual question. Repo rate portion of deposit bank must kept with RBI. This is CRR. Rate at which RBI lends short-term fund to bank. That is repo rate. This should be this one. This should be this one. Then OMO, purchase and sale of government securities. This is true. Credit guarantee mechanism to reduce lending. This is true. So the right answer is only 2 is the correct statement. Next, consider the following statement. Global uncertainty can increase borrowing costs through higher risk premium. True. Firms may delay investment decision under uncertainty due to option value of waiting. True. Financial market volatility has no impact on real economic activity. It is impacting, that's why they are delaying it. So this is wrong. Right answer is A, 1 and 2 only. A, 1 and 2 are correct one. Next, financial inclusion act only as a welfare tool and not as a growth driver. This is wrong. It is a growth driver as well as welfare tool. DPI enable better credit assessment through data trail. Correct. Expansion of bank account automatically ensure access to credit. No, access to credit depends on how much the people are taking the loans and how much the banks are willing to give in that. This is not correct. Financial inclusion reduce systematic risk. This is true. So question is asking incorrect. So 1 and 3. B is the correct statement. So that's it in this chapter number 3, guys. I hope you understand what is this in there in chapter number 3. Please mention in the comment as well whether you are liking this video or not, and as well as also share your inputs regarding what all I should include in this part also that you are facing the difficulties, although I am trying best to cover as much as possible, and that to the point and very accurate, that is useful for prelims as well as for mains. Thank you and God bless you all.